All right, what is up, Mortgage Coach community? I am doing a halftime interview. We have published the report now, so the halftime report is out, but we're going to do a version of this, and it would not be complete without Brian Vieaux, the founder. Well, I know you're an executive. Are you founder of FinLocker?
Not the actual founder, but I've earned founder scars, we'll just say.
Well, I think you're a co-founder because I know by the time it hit my radar, you are the leader, you are the front man, you are evangelizing that whole mission, which I think it's not just FinLocker, it's top of funnel innovation.
Yeah,
You're truly a top of funnel innovator, not only in terms of how you help the mortgage industry win at the new top of the funnel, but I even think about how mortgage executives like myself, the way we're using LinkedIn, the way we are operating at the top of the funnel, you're an innovator.
oh, I appreciate it. I tell people this all the time, Dave. You kind of set the stage for the people today that are more active on social. You've been doing it longer than most, if not everybody in our space. So I've spent a lot of time learning from you and appreciate not just how you show up, but the energy you bring when you show up, because it's never half-ass.
Well, thank you for that. I appreciate it. And I appreciate you. I appreciate all the people because I would tell you when you look at the people that are really winning on social, they're just being valuable. You look at what Greg Shear has done on LinkedIn, he just brings value.
Yep.
He brings great people at the right time to talk about the right issues and brings value. And I think when you're valuable at the top of the funnel, good things happen.
Totally.
So you've read the report now. Anything jump out at you? Just things that you think are more important for the industry to think about as we move into the second half of 25?
I think to me the big play that happened in the first half, if we want to keep into the football landscape, the big play is the M&A stuff that's been going down, right? We're about to see the closing on Rocket and Redfin. Certainly probably by the time you publish this, that'll be closed. So, that deal's on its way to be, becoming real. On the heels of that closure, you'll have the Rocket Cooper. You guys, talked about it, I know, in the report. And then we saw a similar, albeit smaller version of that ecosystem with Lower and Movoto. And so, I think there's more coming. Obviously, we had Guild and Bayview. That's a different, kind of component of it.
But still, these are like big deals.
Big deals.
Big deals.
Yeah, big deals. And
by the way, real quick, is it possible that in the second half we'll have a bigger deal or a comparable deal? Do you think that's even possible, or have we seen the big plays we're going to see in 25?
Well, anything's possible. I suppose. I mean, just look at the White House. Well, we're not going to go there.
Amazon could buy Rocket. That would be bigger.
That would be bigger. I think, yeah, I don't know that that'll happen, but
by the way, I was not predicting that anyone. I was just throwing out some creative thinking so that nothing's off the table.
One that keeps coming up in conversations, and I think this is just pure speculation by a lot of people, just kind of looking at who's left, right, in this game of musical chairs. So Zillow, right? They have Zillow Home Loans. It's a small but growing part of their business. They could make a big move, and Loan Depot's out there, and there's been
Let's not start naming brands. I actually don't like that personally because I think it hurts the brands whose names that are mentioned. So
there's several like that there's reputable big players that would be valuable independent of each other and arguably even more valuable together. Just like I think the ones that we've already talked about kind of are framing up that way. I think the three deals now that have happened, that have been announced, I think all are net positives for those businesses. And frankly, the consumers ultimately that they serve, I don't see any, I don't have any problem with the consumer impact on any of those deals. If anything, the rest of us in the industry need to be paying attention to those playbooks, right? And there is this theory that consumers ultimately want kind of more of a one-stop shop when it comes to buying and financing a home, much like you go and buy a car in a dealership and secure your financing in the same dealership, right? Not comparing buying a car to buying a home, but you get the picture there. And certainly with technology and the way consumers have access to their data and the ability to share it, I think it's these playbooks are out there, they're happening. I think now as an IMB, mortgage broker, an originator that works for one of these organizations, how do you take the learnings of these successful plays so far and create your own kind of mini play in your community? And that's a lot of what I know you talk about on this channel. I think I saw a lot of that in the study and in the report. Is we as local professionals can learn from the biggest of the big and make these plays happen in our community, and arguably win successfully, at a hyper local level.
Yeah, well, I think the further I got into the stories at hand, I do agree that the the moves that are being made, I do think are pro customer. I mean, anytime you can do things that improve price, improve convenience, improve speed, uh, those are good things for customers. And then it makes everybody raise their bar of
Right.
execution. I mean, the part that and I think you and I share this, like if you looked at the value props, price, speed, convenience, coaching, advice, value to help consumers achieve financial freedom is both of us
Yeah.
have in common. How can we, leveraging technology, leveraging processes, how can we elevate that? How much growth do you think we'll see this year? Because I really feel like at Mortgage Coach and our next gen product that we're going to see. I mean, we're already seeing it with specific lenders and specific clients that are doing the right things, like explode LO adoption of technology. Like we've had clients that in a single quarter, Prosperity Home Loans, 3x the adoption of Mortgage
Yeah.
Coach. Do you think that we're finally going to start to see at scale an acceleration in LO adoption of the right technologies?
I do, and I think AI has a big role in that. Like I'll just say at FinLocker, while we have some AI that's LO facing that they can face off with, and some AI in our consumer experience, what we've been focused on, at least initially, is leveraging AI to accelerate the tools that we put in the hands of our LOs to help them with adoption of our product, right? Because it's a lot like, if I think back to the early Mortgage Coach days, you were really changing and teaching and changing the way the average loan officer faced off with a consumer.
Mm-hmm.
And that has its own like change management, process. And we're doing the same thing. We're asking loan officers, coaching loan officers to show up differently and from a timing perspective much earlier in a consumer's financial life than they ever thought they would before as a loan officer, right? We're teaching them and again leveraging a lot of what you've laid the groundwork in your career with showing up as an advisor, not a loan officer. I think of loan officer as a transaction coordinator. An advisor is someone that is now becoming part of, a home buyer's financial life. And so we've struggled for, the early part of our business in adoption because we didn't build enough of the toolkit to bridge the gap between our technology, which we're really proud of, and then the consumer that's going to get invited in. We just assumed if we built it, the loan officer would use it, but we needed to teach them how to use it in the form of educating in their, in this up funnel manner. So for us, AI has helped us accelerate the ability to create and ideate on some of these tools that loan officers can put into place, whether it's a script, a text, an email, or some other methodology to explain to a consumer why they should download this app. I think, and we're just scratching the surface. I think the next 90 to 120 days are going to be fascinating to watch how LOs adopt the AI tools directly and figure out how to connect the dots between their voice, their brand, their tone, and that piece of technology, whether it's MortgageCoach or FinLocker that they're using, in their community.
Yeah, no, I totally agree that AI is accelerating the learning curve and LO adoption. Anything else? Let's just kind of go through the boxes. LO adoption. Anything else you want to call out there? Anything that you think are just best practices they could be new, or they could be like, hey, what's old is new, and this is the playbook for LO adoption of technology. Anything come to mind?
Um, well, I mean, I'd be remiss if I didn't talk about, it's one thing to talk about LOs, mortgage advisors, home ownership advisors as educators, and to say it's a great idea to do it and why it's good for your business and good for your community. But absent of delivering them a set of tools that they can actually go put into play to make that, to execute on that idea, most companies, mortgage companies, aren't in a position to create content for their LOs to really show up in a differentiated way in their community. And that's where I'm so thankful for what you and Kristen and Todd have created with First Home IQ, because you're now taking the lead on this modern methodology, this modern way to communicate, this modern way to deliver education at scale through those local community-based advisors, ambassadors. So anytime I can share a best practice, it's my number one best practice is not going to be about FinLocker. Sorry, Dave, it's not going to be about MortgageCoach. It's going to be, you need to be part of First Home IQ to leverage the world-class content that has been created and will continue to be created to show up differently, in your community. And it's surprising to me how many people are still not really fully aware of what y'all are doing. And I think it takes all of us to be continually kind of communicating the value of the content, but how you can do good by doing good, or do well by doing good.
Yeah, well, I appreciate you calling that out, and I appreciate that you're a partner with FinLocker and First Home IQ. And I do think at Mastermind, I was at the Mastermind event last week, and I had the opportunity to do a keynote. And one of the things I talked about was how I think for the second half of the year, and who knows if rates come down in any type of meaningful way, maybe what I'm going to say next still has a lot of value, but it doesn't have as much value. But for the most part, the mortgage industry and loan officers, they find loans and they win loans.
Right.
Find, win. And I think we live in a world right now where we need to create
Yes.
loans. And there's a lot of first-time home buyers, Gen Z, millennials, that could buy a home. Like if they were fully educated and enlightened, they would have it figured out. And then they have parents and family members and communities that aren't enlightened. Parents say, hey, you can help your kids house hack. Hey,
Right.
you can help your kids get into duplex or triplex. But there's a lack of creativity and a lack of know-how. And as an industry, if we brought that to communities at scale, we wouldn't be finding loans, we'd be creating loans.
Right.
We'd be, and so I do think we got to quit waiting for someone to refer us, someone to say they need us, someone to run a credit with some report with someone else, and we get a trigger where we start chasing them. Like, we need to be the creators of homes and loans as an industry. Any thoughts on that whole
Oh,
theory?
so yeah, so many thoughts. The I've I have the fortune, and I'm very grateful for the opportunity. But I write a small piece every week in the Chrisman commentary. So, Rob's got this amazing network of folks that subscribe to his newsletter. And so I write what I call MLO Viewpoint, kind of play on my
I've
last
seen
name.
that. I didn't realize it was weekly, but I guess I just didn't get the weekly memo, but I love that.
So yeah, it's been fun. And in as we're recording this today, I think so they publish a blog on Monday night, and then Tuesday it shows up in the newsletter, in the email. And so this latest piece I wrote was, around, we're kind of in the early stages of the dog days of the summer already. Like
Mhm.
this, at large, the buying season hasn't really done what a lot of people thought it was going to do. It's been a little bit of a struggle, right? And so we can, we can all play the woe is me game, and make excuses and point every reason why, as an individual, producer, my numbers are where my numbers are. Or we can go find ways through the rest of this summer to create opportunities that may not bear fruit until the fall, the winter, or even next summer.
Right.
But complaining about the market's not going to do you any good. So what can you do? How about this? How about become part of First Home IQ and find ways in your community that you can deliver financial literacy education and get in front of next year's first-time home buyer or the year after's first-time home buyer. And I think it's, if I was back as an originator, and I haven't originated alone since the early 90s, but I would be playing the ultra long game and doing what you described, creating my own opportunities, leveraging my ability to be physically and digitally present in my communities, and become that trusted best source of financial education as it relates to all things home ownership. And, I don't care what you say, but if you invest 6 months, 12 months, 24 months into someone or some group of people that are buying their first home, when it's time for them to buy and apply, you're probably not going to get nickeled and dimed over an eighth in rate or a quarter in rate. You've done you've done so much that they're going to be fearful of doing anything but working with you at that point.
Yeah, no, you're right. One of the things we think about this a lot at both Trust Engine and our Mortgage Coach Next Gen product and First Home IQ is that we've really moved into a new era. I mean, for multiple decades, the average age of a first-time home buyer was 29 to 32.
Yeah.
And it went to 35. Last year was 38. And I don't know if you have data on this, but I'm told it's in the 40s in
I've
2025,
I haven't seen the data, but I've heard from folks that are signaling that we're going to see it go north of 40 for sure.
which think about that, guys. That's like a 50-year trend of the average age of a first-time home buyer was a decade from when the homeownership game started. And I
Yeah.
always think of the homeownership game starts at 18 because that's when you can sign for student loans,
Yeah.
you can sign for credit cards. I mean, that's when, you know, the race for homeownership starts. I know when it started for me, I was like making all the wrong moves.
Sure.
The Sears card, racking it up. Uh, I don't
Yeah.
know. I don't know if Sears is still a thing, but I dated myself just now. But a lot, millions of consumers go the wrong way, and now we've added a decade to it, and so it's like I think every mortgage professional needs to think about the incubation process of have content so that you can drive 10-day,
Yeah.
have content so you can drive 10 months, but you need to be playing the 10-year game.
Sure.
You need to be like delivering a content experience that educates someone from the age of 18 for 20 years.
Yeah.
And again, hopefully if you play the game right, it doesn't take 20 years. It takes 5 years. It takes
Well,
8 years. It takes less than 10 years.
could take 6 months if because you've leaned into this idea of being the community educator, again, both physically and digitally. You may uncover that someone who thought they were 10 years away is really 10 months away. They just,
And by the way, sometimes they're 10 days. It's like,
that's right.
hey, mom and dad, we can
Yep.
fix this right now. Hey, I did not know about that down payment assistance program. I didn't know I could do down payment assistance program on a duplex or a fourplex. And now I can use the income from that duplex and fourplex combined with the down payment assistance program to achieve home ownership like
Right.
that. People don't know. So what's going on with the product? You know, what's new? What's the latest and greatest from FinLocker in halftime of 25?
Yeah, yeah. So we have a version of our product. So First Home IQ has its own First Home IQ app in the App Store.
Thank you for that.
It's all, we're so proud of that. We love that we could play that role. It was a no-brainer from day one. So we stood up about a year ago now. We stood up a brand. We call it Key Steps, powered by FinLocker. Key Steps is our non-enterprise version of our technology that's available to any loan officer, you know, across the industry, across channels, right? So whether you're at a IMB, a mortgage broker, bank or credit union, an individual loan officer now can subscribe and have access to the same technology toolkit that, you know, the PRMGs and the Synergy ones and the Neos have under their own brand. So we released a new feature across all of our versions, including First Home IQ and Key Steps, which we call Buyer Vision. And so, Dave, this was in response to just tons of conversations where, especially in the last 6 months, where the conversation went like this: if only I had something that could help me reduce the number of soft credit pulls I run at the top of the funnel and pay for at the top of the funnel as an originator, right? And so we started to kind of just listen to those, you know, if only statements and comments. And, you know, we quickly realized, well, when a consumer creates their account in First Home IQ or S1 FinFit or Neo Experience or Key Steps, they're prompted to enroll their credit. So we have all of that credit data. We ask for information on their income, and we actually give the consumer a tool to link directly to their direct source payroll data through their you know, payroll portal. And in cases where a consumer is also already linked, you know, permissioned into their bank accounts, we can see the balances in their savings and checking accounts, right? And so we've got all this data on this consumer, from credit to income, employment, and assets. And so we created a version of all this data. We call it Buyer Vision, where the consumer in the app at any time can share access to Buyer Vision directly with their sponsored loan officer, right? We're a one-to-one system. So it's Dave, the consumer, Brian, the loan officer. We're connected one-to-one. And so what Buyer Vision is doing for loan officers, especially those that you know, kind of struggling with the cost of soft pulls at the top of the funnel, it gives them another option. And so instead of, let's just say on average, you know, an LO runs 10 or 15 soft credit pulls a month, but only 5 of those ever turn into a deal, and they spend $20 a pop, there's $200 gone every month that never turns into a closed loan. I mean, never, right? And so what we're offering is, instead of all of your leads and early prospects going right to soft credit pull, if you start them through your license to Key Steps or First Home IQ or what have you, and the consumer then shares access to this snapshot of their data, at a glance, a loan officer can look at Buyer Vision and determine if there are any red flags that would kind of, you know, be blockers for moving forward at this time. And so there would be no reason at that point, if there were any of those red flags or blockers, to go pay $20, $25, $30 for that soft single bureau credit pull. And so now they're in your ecosystem as well, getting the engagement, the nurture, and the education tools to prepare themselves for ultimately remedying whatever it is in that credit that's holding them back. So,
No, by the way, are you saying that in the first, you know, for the ambassadors that are in the First Home IQ app, this functionality is available?
yep, it's live today.
Oh my God, bro, we're gonna have to like do a part 2 on this and
Yeah.
bring one of our mutual customers in. I mean, that is something at Trustage, and we've been talking a lot about our impact on turning credit reports into funded loans. And
Yes.
like, hey, the mortgage coach loan officer that's delivering this point of sale experience
Yep.
versus one that's not, it's like a 30% difference in conversion. Like at Churchill, loan officers that don't use mortgage coach convert credit reports at 21%.
Yep.
Loan officers that use mortgage coach are 28%. And now you're telling me that they can also save a lot in credit
Yeah.
expenses
So I think of it as a continuum. So
and improve conversion.
you describe credit pull to conversion, and I totally love and uh, get how Mortgage Coach, the TCA, definitely moves the needle in that conversion. So then, if imagine a scenario where that same Churchill loan officer uses FinLocker to, instead of sending 100% of their leads right to soft credit pull, they run them first through FinLocker, Key Steps, Buyer Vision, First Home IQ, and then only send those that don't have a red flag to soft credit pull. So you're still going to convert, you're still going to do what you do on the TCA Mortgage Coach side to maximize conversion. And then
Right.
the combination of changing the waterfall before credit pull could have it almost an equal economic impact in the form of just dollars not spent in on those credit pulls.
Wow. That is pretty interesting. Man, I'm going to have to drill down on that.
Yeah, it's we're live now for about 2 weeks. We've done a it's
So,
kind of
so I'm not behind the eight ball here.
no, it's
I'm kind of like, how come I didn't know about this?
we've done an intentional, soft-ish launch, just we use our power users as our, after we've cleared our own internal testing before we release product, we use our power users to kind of uncover any other bugs that we might want to address before we open it up to everybody. But it's available. Everyone's got access to it. We just haven't done the full launch. So I guess this is like an exclusive pre-launch of Buyer Vision.
Man, can't wait to do more on this. I mean, that's super exciting. So, before we wrap up, any other just things I do like I'm taking a takeaway from this, and I think we'll get an update to the halftime report where with the increasing cost of credit reports, it's important that lenders are thoughtful and really revisit their process and the adoption of the processes and the tech they're using to reduce the cost and of credit reports. And then, what can they do to increase the ROI of credit reports? So
Right.
focus. I don't think we got into that in as much detail as we could have in the halftime report. And then number two, how do you just get a better ROI? Like, let's face it, that is where the loan manufacturing process starts.
Yeah.
What can we do to convert more of those credit reports into fundings? Like, we could be profitable right now in this market if we obsessed on those two things and we executed well. You agree with that?
100%. Yeah, there's still, and that's one of the things I'm hopeful that AI helps impact at that individual producer level is, their ability to either finally adopt the tech that they already have in their stack or make the decision to get rid of the tech that they're never going to adopt.
Right.
Because all that stuff factors into the cost to produce one way or the other. Somebody's paying for it, right?
Right.
And look I'm saying that knowing that I have LOs that subscribe to my product that aren't optimizing their usage of it, right? So I'm calling out my own stuff too. Dave, I would the last thing I would kind of leave the group with is, we had the trigger lead legislation that, was a multi-year cross-functional, cross-association effort across the industry. It was like really one of the first times that I can remember that the entire industry, all channels, and the associations that support all channels, whether it was the Mortgage Bankers Association, the National Association of Mortgage Brokers, the Association of Independent Mortgage Experts, and the Broker Action Coalition, everyone was kind of in lockstep at least the last 18 months on this trigger lead legislation. And we've seen now, I know it's not been signed into legislation yet, but we're tracking pretty positively. We've seen where the power of our industry when we work together ultimately for consumers can have impact.
Right.
And so I would, I would leave the audience with this. There's going to be more stuff that we want to address as an industry that ultimately impacts the consumers that we all are blessed to serve. And I would encourage, everyone listening and watching and that's involved with any of your channels and trade associations to challenge yourself and others in your channel and your association to think beyond just your silo of business, right? So if you're in the wholesale channel as a mortgage broker, I would challenge you to think about the consumer first, irrespective of channel, and the same for IMBs, because we have some things that are, on the legislative slate that we should be addressing over the next few years that will ultimately help create sustainability for our industry. That's been very good to a lot of us, most of us, but ultimately better serve consumers in the form of the lowest possible access to home financing, which ultimately leads to higher home ownership, which ultimately leads to a bigger business that we all get to serve every day.
Yeah, no, I agree. If the more we can be consumer first, as an industry, we'll be better off. That was another takeaway at the Mastermind Summit. I had the honor of facilitating the executive panel, and I can't remember which one of the panelists made the point, but they're like, consumers are not comparing your tech to other
No,
mortgage tech. They're comparing you to Amazon.
that's
They're
right.
comparing you to Uber. They're comparing you to Instagram
Yeah.
and really wanting the same level of design excellence, performance excellence, and just a real, I don't know. I mean, that's always been our bar at Mortgage Coach. Not
Yep.
bragging, but I will
Yeah.
brag. Like,
Yeah.
like
Yeah.
we always felt like, hey, we were designing an experience for the consumer. And I don't think technology players in the mortgage business have taken that seriously enough. Any other
Yeah.
closing thoughts, bro?
No, I mean, guys, there's business to be had. And Dave, to kind of pull this back to the opening, you have to be willing to go create opportunities for yourself, for your community, for your family. Um, and so, I I would lean into the educate first mindset as an originator. And if I promise you, if you take that approach and put yourself you put yourself out there as that resource, um, you will be one of the winners when we do this halftime report in 2026. There's no question in my mind. It's not
No,
too late. It's not too late to get started.
no doubt. So for anyone watching this, follow this guy on LinkedIn. He is pure value, pure gold. He's just can always sense his heart and service to the industry. I think he's truly one of the best when understanding the top of the funnel. Like what is the new top of the funnel in the mortgage industry? A real thought leader there. Very much appreciate you, my friend. Hopefully
Likewise.
everybody got value. If you have not already subscribed to the Mortgage Coach YouTube channel, hit the subscription button in YouTube right now so that when new videos get uploaded, you get the memo. And follow me at savageinsights.com. And if you are not already a mortgage coach or you're an executive that doesn't have Mortgage Coach built into your tech stack, go to our website, get a demo. We try to, and I know you do the same thing, Brian, when people are demoing your platform, like you're getting value. Like
That's
we're
right.
we're sharing scripts. We're showing how the best of the best are winning. Where's the best place for people to go if they want to learn more about FinLocker?
Yeah, so I would go to finlocker.com, and there's a about page. There's a link to Key Steps, and Key Steps is the best place to go because you can see a demo, like a short 7-minute demo on the website. Um, you can hit me up on LinkedIn. It's my CRM. It's where I spend most of my time having conversations on LinkedIn. So I'd love to have you follow me there and connect with me there. And if you want to learn more about FinLocker, I'm happy to, get on and do a one-on-one demo with you anytime.
All right, everybody. Well, hope you got value. Take care, everybody. It's going to be a great year. It'll be interesting to see what else happens that we do not expect to happen. Hopefully we see rates come down even faster and harder than we expected. Take care.